Hey, welcome to the Q4 2020 market review. And in today's session, we're going to very quickly go through skipping portions of the Q4 quarterly market review document, which is also found at a blog post at our website at O'ReillyWA.com. That's OREILLYWA.com. So with that, let's get started. Jumping forward a couple slides here. This is for the quarter, looking at major asset classes in Q4 2020, and we had a strong quarter. There was some recovery going on in the global real estate, which we'll talk about more in a second, but all four major categories of U.S. stock market, other developed countries, emerging markets, and real estate were all up double digits. And the bond market, broken down by the U.S. bond market and the global bond market, were both up slightly and were up strongly for the year. And let's look at that. U.S. stock market up 21%. For the year, emerging markets 18.3, two big points. Global real estate for the whole year was down minus 9%, even though it was up strongly in Q4. So Q4 gave us a big rebound, but still negative for the year, which kind of makes sense with the whole COVID virus situation, keeping people from going to a workplace, and therefore many workplaces losing their leases and things like that. And there you see the U.S. bond market for the year up strongly, 7.5% on an overall basis, global 4%. And I want to point out here that TIPS, Treasury Inflation Protected Securities, which are a bond that is designed to go up with inflation, and it doesn't have very much of a dividend, often almost zero, but the actual value of the bonds respond to inflation. They're designed to do that. They follow a inflation index. And those were up about 11 point, the particular fund we use up 11.6% for the year, and in general about 11% for the year as far as the index goes, which I'll show you in a moment. This shows the quarterly performance for the whole world, along with some different little headlines on the bottom there. You can look at that at your own leisure. And then this is for the whole year, and you can see what I call the pandemic plunge right here. Follow my mouse. And what we did for our clients is during the steepest part of it, in basically the middle of March, we did 2 or 3 rebalances, the last one being literally on the bottom, where we were moving some bonds into stocks, taking advantage of the cheap stock prices that resulted from this pandemic plunge. And then in early June, right at this peak about here, we then reversed that process and sold some of those stock funds that were up 50% at that point, giving a nice little extra return on our clients' portfolios, and taking advantage of that quick move down and back up again. This is a ranked returns for the quarter. And you can see the small cap value in the U.S. was the strongest performer. I won't go through all the details here, but it kind of follows what we just saw in the summary. And then everything was up strongly. In fact, the weakest thing was the S&P 500 index, which was still up double digits at 12%. Looking at the U.S. stocks specifically, again, small cap value won. So, by the way, in the way that we invest, we give our clients a slightly heavier exposure to small value because it is a better return over the long haul, and the data going back, many decades proves this statistically significantly. So we just slightly tilt our clients' portfolios to a slightly higher percentage in these areas to take advantage of them in a very prudent way. International developed stocks, small and value, were also in favor for the quarter. By the way, the first 3 quarters of the year, they were not in favor. and so far early in 2021 they are. Emerging markets, small in value, also in favor for the quarter. This shows stock market performance by country, although that's interesting. We wouldn't, you're not going to invest based on your prediction of which country is going to perform better, but it is sort of interesting just to see what happened. We're not going to go through it. Same thing with currency performance. The real estate trusts, I mentioned that the global was down 9% for the year, but it was up 15% for the quarter. So it was down a lot more than 9%. It made up a bunch of that in the fourth quarter. Same thing for U.S. REITs, which were up about 13%. They ended up down 5% for the year. Commodities we'll skip. Fixed income, this is where I just wanted to point out the U.S. Treasury. If you look at the Bloomberg Barclays U.S. TIPS Index, it was up for the year 10.99. The particular fund that we used from Dimensional Fund Advisors was up 11.65% for the year. So that was a really nice feature for our clients who are in conservative portfolios and retirement, because they got a nice little bump from a portion of their bond investments. And we'll skip that. The impact of diversification. This is always an important slide just to remind us of the overall concepts here that we're employing. Basically, what this shows is that you take more risk, you get better return. You take less risk, you get less return. You take more risk, you get more volatility. In fact, volatility equals risk, essentially. And so 100% stocks, you get the biggest returns, the most volatility. And then as you go down the ranking here from 100% stocks, 75, 50, 25% stocks. And then this bottom one is 100% treasury bills, the most conservative investment in the world, the safest, but also the least return. So you'll be lucky if it even keeps up with inflation, whereas the 100% stocks destroys inflation, so to speak, as $10,000 went to $140,000, a 14x increase over a 33-year period. And then finally, the last several pages of this document, which by the way is available at our Q4 2020 blog post. We have a blog post every quarter that brings a bunch of information into one post. This is available both as a download as well as a kind of a display on the bottom of the blog post. And this particular article here, which is an article by Dimensional on the year 2020, looking back on an unprecedented year. This is also a separate blog post we have at our website, O'ReillyWA.com. And so it's attached as the last portion of this report. So this is John O'Reilly. In just 8 minutes, I gave you a quick summary of the market, and that's our goal with this. So I want to wish you a great 2021. Give us a call if you have any questions, and enjoy looking at this information in detail at your leisure. Take care. Bye-bye.